infrastructure, the surroundings, the landscaping. If we can get those things implemented through the building codes, we can definitely have an impact on the reduction of wildfire damage. And of course, enforcement is the key. It's great to have a strong building code, but if it's not enforced, it doesn't really mean anything. One of the things I also wanted to mention are the things that the county officials can do. Clearly making wildfire property protection a priority would be incredibly helpful. As I said earlier, community-wide efforts are definitely the best approach. One of the things we found in the Witch Creek fire was we studied 3 different communities. 3 of them, or excuse me, 6. 3 communities were built to withstand wildfire, and 3 were built to traditional construction standards. And it was incredible. The community-wide approach in the 3 communities that were wildfire resistant literally suffered no damage. It was amazing. Whereas the 3 communities that were built using traditional standards, unfortunately, did suffer a lot of damage. The other thing that we've learned in working with the fire services is that they have to make split-second decisions every time they're in the middle of a fire. So they have flat out said they'll get to a wildfire situation and they will assess, this home, these buildings are not going to make it, so we're going to move on over here where we think we can be helpful. So what we want to do is make sure that, we have our communities built to wildfire resistant standards so that the fire services are able to help us when the fire strikes. The other thing that came out of the research we did was 9 regional wildfire retrofit guides. These are geographically specific. We have them for all of the 38 states where wildland-urban interface areas are prevalent, and they go through all of the things that both business owners and homeowners can do to better protect themselves. We also have included in there an assessment checklist, so you literally can go down the checklist, see how your property stacks up, and it also provides a cost assessment for what each of these things may run people. The last thing I just wanted to mention is there are a couple of really terrific organizations out there. I'm sure a lot of you are familiar with them. FireWise is a group that works through the National Fire Prevention Association. It's federally funded. They've got 500 communities around the country, and they actually certify an entire community. Again, it's that community-wide approach, which is really, really helpful. They provide all kinds of resources for people, so that may be a group that you may want to check out. And in California, the Fire Safe Councils, again, a terrific organization. They've done tremendous work and can be very helpful. They've got chapters in a number of western states beyond California, Nevada, Arizona, et cetera. And they actually make grants to local chapters, so it's possible that you may be able to get some resources from them. So thank you very much, and I know we're going to hold questions to the end, so I look forward to anything you may want to ask at that time.
Thank you, Brenda. I see we do have a few questions popping up already, but again, we're going to hold those until the end. Before we move on to our next presenter, we're going to ask another polling question of our audience. Has your county experienced a wildfire that has endangered property? First option, in the last year, in the past 2 years, within the last 5 years, don't know. When I mean property, I mean all homes and businesses, but I also include in that watersheds, grazing lands, farms, etc. So, looks like quite a few have had one in the last year and almost as many in the past 2 years. So Brenda, are you still on the line?
Yes.
Based on what you know, does that surprise you? I mean, almost half in the last year.
No, it doesn't surprise me at all, because the risk is getting greater, and we're seeing more and more fires all over the place. And there's a lot of discussion in the scientific community about what the cause is, and there are some folks talking about climate change and so on. But yeah, we're definitely seeing a major increase.
Okay. Well, thank you, Brenda.
Thank you.
Our next speaker is Carol Walker. She has served as Executive Director of the Rocky Mountain Institute Information Association, RMIIA, since 1998. RMIIA is a nonprofit communication organization that represents auto, home, and business insurance companies in the Rocky Mountain region. Ms. Walker will discuss how insurance companies view the current wildfire property risk and the key role insurance plays in wildfire mitigation and stakeholder partnerships. Carol?
Hi, everyone. Can you hear me?
Yeah.
Okay. We're just figuring out the technicalities of this. While we're bringing up my PowerPoint, I am Carol Walker, as James said, Executive Director of Rocky Mountain Insurance Information Association. To all of you, what that means is we are a trade association that represents insurance companies in the Rocky Mountain region. So I have Colorado, New Mexico, Utah, and Wyoming. In my 12 years of representing the insurance industry, one thing that keeps coming back to me every time I talk to county officials, fire officials, is that really the missing piece of the puzzle when it comes to wildfire mitigation is insurance. It's oftentimes the last thing that government stakeholders frequently don't consider when they think about the role of private industry until after a major wildfire. We have made huge strides here in the Rocky Mountain region. We work very closely with emergency managers, fire officials, FEMA, the Colorado State Forest Service, and others. And we've made tremendous strides. I can tell you, though, that we're really excited about having this opportunity to talk to county elected officials, because for us, that's often the missing piece of the puzzle. I can tell you back in 2000 at the Cerro Grande fire, we were invited to be part of a government news conference, then at the last minute said, we don't want insurance to be involved. This is part of a government news conference. And really it was the local city and county officials of Los Alamos who knew that their citizens watched their homes burn down on television the night before, and they were concerned about what the insurance companies were doing and what their response was going to be. So we know that you're a key audience for us and a key stakeholder that we want to partner with. When we think about the missing piece for the insurance consumer, they don't want to think about the unthinkable until it's too late. But what we know increasingly, and I think is the key to our conversation today, is that more and more insurance consumers are thinking about insurance because it's that short-term pocketbook incentive that's going to make them do the right thing. Sometimes we can throw all the stats in the world at them, talk about their home burning down, loss of life and property, but when it comes to getting their insurance bill or their insurance company saying, if you don't do A, B, C, and D, whether that's clearing the needles off your roof, making sure there's a road that emergency officials can get down, or you risk losing your insurance, we know people are going to pay attention. So I hope one thing we really walk away with today is how we can all work together as county officials, state officials, emergency managers, fire officials, and insurance companies to really get that message out to consumers and get their buy-in that this is a shared risk that we all need to face as communities. So in my 12 years in representing the Rocky Mountain region, the question I most often get, especially in the past few years, is what direction is insurance headed when it comes to wildfire mitigation? Well, I think we kind of have to take a step back and think about how insurance works, because the traditional rules still apply. Insurance really works backwards. What your insurance company is always trying to do is predict future risk from their past experience. And how do they do that? Well, they're looking at individual customer risk, first of all. What's the current cost of home repair or replacement? And in insurance lingo, what we call that is insured to value. It's not what you can sell your home for, and that's probably a lot less than you could a few years ago, is what would it cost to repair and rebuild that home in today's building costs? Because really that's what concerns your insurance company. If that home burns down, what is it going to take to rebuild it and replace it? Where you live, proximity to quality fire protection. As county officials, fire officials, everyone's worried about that ISO rating, that insurance services office rating, and it goes from 1 to 10, 1 being the very best, 10 to being no man's land. How close are you to a fire hydrant? How close are you to quality fire service? And then what we're really talking about today is steps you've taken to protect your home. Have you thinned your trees? Have you planted fire-resistant plants? All of those different scientifically proven steps that Brenda was talking about that really are going to go a long way towards saving your home. And then, of course, your insurance company is also looking at the market risk. How safe is that community? And the good news about insurance, there is good news, is premiums are based on weather patterns and claim trends over long periods of time. So one wildfire or natural disaster, that doesn't directly affect your premium. I get that from reporters all the time. You know, hail will be falling from the sky in Colorado, and they say, our rate's going to go up. Or a wildfire is burning in California. How's that going to affect our rates? It doesn't have a direct impact, because what the insurance company wants to know is what's that risk in that community, and what's that risk not necessarily from that wildfire in California, but what's it going to be in Utah or Pennsylvania or other states. And then obviously they want to maintain solid claim reserves. They want to take in enough premium to be able to pay out those claims when disasters happen, because unfortunately we are the Cassandras of the weather world. Insurance companies are always knowing that that next big storm is going to hit that tornado or that major wildfire. When we look at actually the disaster pie, so to speak, as insurance companies are always trying to second-guess Mother Nature, they're looking at what happened in the past, as we said. If you look at insured disaster losses from 1988 to 2007, they totaled more than $310 billion. And when you look at how that pie is sliced up, obviously we all read the headlines out of Florida and out of Texas, is that much of it is hurricane. Almost half of the insured losses in that time period are from hurricanes. And when you look at fire, and that's U.S. fires and catastrophic wildfires, it's about 2.6% of that disaster pie. So when we're talking about actual insured losses, and we're talking about billions of dollars in insurance terminology, that's still a pretty small makeup of that loss. But I think what's important to point out is, as we're seeing all of these hurricane losses, 8 of the top 12 disasters affecting Florida, that while we aren't seeing those huge dollar losses from wildfire, it's certainly on the radar, because as Brenda pointed out, in almost every state, we have a huge potential for a catastrophic wildfire, or what we call in the insurance industry, a mega catastrophe. And I can tell you right now that the way insurance companies are viewing risk and wildfire risk is changing. Before the early 90s, when we had Hurricane Andrew and the Oakland Hills fire happen, those really became pivotal benchmarks, because before that we didn't think a catastrophe could cost that much. We're all in the risk business. We can handle an emergency. We can even handle a disaster, whether that's a hailstorm or even a tornado hitting Kansas. But we are in this new era of mega catastrophe, and I can tell you, it's scary. It's scary as elected officials. It's as scary as insurance companies and as consumers, because the question starts becoming, how do governments, insurers, emergency managers, and citizens prepare, respond, and recover from these mega catastrophes, these multi-billion-dollar events? We're not talking a few $million anymore. We're really talking about how do we price insurance to be able to pay for it, get people back in their homes, and rebuild these communities. And I think when it comes to wildfire, it becomes particularly important to talk about how do we get people to share the risk? How do we get people to protect themselves? Purchase the coverage they need, be doing those annual checkups, making sure they're insured to value, that they have enough money in their insurance to be able to repair and rebuild that home. And then also, how do they protect their property? Because when we were looking at those trends and hurricanes making up so much of it, what I can tell you is that wildfire is viewed somewhat differently, because number one, we do have the ability to be able to prevent and mitigate damage a little bit better. Obviously, if you live in the WUI, right up against the forest land, you're going to be at higher risk. But we do know there are scientifically proven steps, and thankfully groups like the IBHS are constantly doing that and looking at it, like with the Witch Creek fire, is that unlike earthquake or hurricane,